Well, folks, it's time to kick it old school. So you can feel cool. Yeah.
What's up everyone, my name is Ale and welcome to My World of Finance. You know what I've been seeing in the news and in YouTube videos and in comment sections a lot? A lot of people are talking about a market crash, and it seems like a lot of people think that it's coming real soon. Well, if you're one of those people, then you might be thinking about investing in gold. You see, in recent history, when we've had a major stock market crash, gold prices have usually gone up. But we know that that's not always the case. In the early 80s, the S&P 500 dropped around 27%, and gold prices dropped right along with it. But still, what we usually see is that when we have a market crash, usually gold prices do go up. And so if investing in gold is something that interests you, then you might also be interested in investing in gold stocks. These are mining companies that are directly affected by the price of gold. Now, I'm not personally invested in any gold stocks yet, but there are a few that I track on a regular basis, and I am heavily considering buying some shares of, especially the first one. But I'm going to talk about these three different ones. One is Kinross Gold, the other one is Gold Corp, and the other one is Barrick Gold. Now, the first one is Kinross Gold, and their ticker symbol is KGC, and that's my personal favorite. But they are infamous for making some horrible business decisions in the last couple decades, one of which was acquiring another mining company called Redback Mining when gold prices were very high. And if there's one thing that you learn in investing and in business, it's that you buy low and you sell high, not the other way around. And so what happened was that gold prices came back down and KGC suffered very badly. At the time of acquisition, they were trading at around $20 per share. Now they're at less than $4 per share. Well, that was its past, so what does its future look like? Well, they have several projects in the works, one of which is their expansion of the Tasiast mine in Mauritania. Phase 1 should be completed this year, upping their production by 60%, and then phase 2 should be completed sometime in 2020, and that could possibly double their production at that time. So a few expansion projects in the works, coupled with a share price that is very low at less than $4 a share, a PE ratio that is very reasonable at around 11, and a share price that is trading at around 4 times next year's cash flow, which is very low compared to its competitors, I'd say KGC is definitely worth taking a look into. However, if there's one thing that I always struggle to understand with gold stocks, it's their balance sheets. And the reason why is because their assets tend to always be tied heavily to raw materials, property, and machinery, things that I don't really know a whole lot about. They also tend to have a lot less cash than debt, and that can be a very scary thing. In KGC's case, they have around $750 million in cash, around $500 million in short-term investments, but over $2 billion in long-term debt. So they have a very poor cash to debt ratio, which can be of great concern. Still, total assets are around $10 billion, while liabilities are at around $4.5 billion. Now, if you're looking for a safer gold stock, my second pick tends to generally be considered a little bit safer, and that's Gold Corp, and their ticker symbol is GG. In fact, according to Market Realist, 45% of analysts gave it a buy rating in 2017, but in 2018, this year, it went up all the way to 70%. Now, as always, gold prices can drop, and when they do, it's important to be invested in a company that has little to no debt. In Gold Corp's case, their debt to equity ratio is around 20%, which is very good compared to its peers. In KGC's case, their ratio is much higher at 37%, so Gold Corp is a lot lower in that case. However, they are a bit more pricey than KGC. As of right now, Gold Corp is trading at around $14 per share, and their PE ratio is a lot higher at around 20. Still, with a better balance sheet, multiple expansions coming in the future, and better analyst recommendations, Gold Corp may be worth taking a look into. And speaking of those analyst recommendations, 23 are reported for Gold Corp on MarketWatch.com, with 15 being buy and 6 being hold. In KGC's case, they have 19 reported, with only 8 being buy and 9 being hold. Okay, now my third pick is a very well-known gold stock, and that is Barrick Gold, and their ticker symbol is ABX, and they're very well known, especially recently, for producing massive amounts of gold and raking in very high profits. When speaking about production, Barrick Gold brought in a massive amount of over 5.3 million ounces of gold in 2017 alone. They also reported an EPS of 1.23, which represents year-over-year increases for the last few years. In 2014, they reported a negative EPS of 2.5. In 2015, it was a negative EPS of 2.44. In 2016, it was a positive 0.56, but then in 2017, they reported a massive EPS that we spoke about earlier, the 1.23, which represents a year-over-year increase of 120%. However, looking at those numbers, you would wonder why their stock hasn't been climbing. In fact, they're still trading at around $12.81, and year to date, they're actually down 11%. Part of the reason why is because of low production guidance for the year, and we all know how much guidance can affect the stock, but this might actually be a blessing in disguise because it may provide a lower entry point for the stock. And if gold prices rise, that could offset a lot of these low production worries. However, a major concern that still remains with ABX is their balance sheet. They have one of the worst debt to equity ratios amongst its peers at around 70%. Although they have been working at it, year over year they have brought down their debt 19%, and their PE ratio isn't too bad at around 16, but it could certainly be lower for my taste. Overall, I think ABX is a decent stock looking into, but it's definitely not one of my favorites. Okay, now I actually have a bonus gold stock, so this is a fourth one, and the only reason I'm including this one is because lately I've been hearing a lot of people talk about it, so I just wanted to kind of quickly mention it. I don't really like it, and I'm just going to give you just a really quick reason why, but that is Newmont Mining, and their ticker symbol is NEM. Now this one is my least favorite out of all the ones I mentioned, and they do trade a little higher at around $39 per share. They also have a PE ratio that is ridiculously high at 480, and their PS ratio is a little more reasonable at about 2.7. By the way, if you don't know what PE ratios and PS ratios are, I did recently make a video and I'll have it linked down in the description in case you want to watch it. Now again, I don't know much about NEM, I don't really track them, but what I will say about their debt is that they have been improving their debt by around 83% since 2013. At the end of 2016, their debt was at about 1.9 billion, and at the end of this last quarter, it shrunk to 1 billion. So they have been making a lot of improvements. I just feel that they're too expensive for my taste, so I'm not really interested in NEM. Okay, so that's all I have for you guys today. I hope you enjoyed the video. Make sure you leave a comment down below and let me know if you're interested in any of these gold stocks that I mentioned, or if there's one that I forgot to mention that you're interested in, let me know in the comment section down below. If you want to support the channel, all you have to do is hit the like button, and it means the absolute world to me. Thank you so much for watching, and I hope you all have a wonderful, beautiful day, and you take care. Bye.